Hi and welcome to the market view for Friday the 24th of October 2014. And yesterday's trading session was an interesting one. We didn't have any trades until around 5:15, 5:30 before the market actually started to show some signals. In fact, it's a bit later than that. So to start off the session, the market trading higher, trading through the 16,650 up to the 16,700 area there, and then trading sideways. And as I fast forward this, we can see we had a signal turn up at 1735, a potential short. Now there's a thing to note here. There's a couple of things actually. First, the entry price is right on the support there of 16,700, and these psychological lines are incredibly powerful in the Dow, as you'll see here at 16,650, the market finding support there and then moving higher. It hits a resistance, it pulls back, then drives through, and here's your clue here. You've got this situation here where once the market had broken through, it's then used the 16,700 as support. So in this situation here, you've got the market then coming down, and you'll see in a minute hitting the entry price there, bang on the 16,704 entry price there, and then just trading slightly lower to the 16,700 support. And you can see there, look how it's finding support. So there's your first clue that this trade isn't going to produce a good trade. It goes through, and the maximum you can get on that trade is 12 points there. And if you look at the bottom window here, you can see that the volume is low. And if anything breaks, or if the market breaks any support line, then you expect to see an increase in selling coming into the market. You want to see red bars, so that it proves that there's some selling. Now what's interesting here is you can see how, watch the volume at the bottom, you can see the buying coming into the market there as prices come off the low. I'm just going to go back and forth and show you that, because that's important, and these are the nuances that you actually learn to read in trading the markets. But notice again, very powerful but very simple technique here. The market is failing to close below this 16,700 support area. To move lower requires an increase in selling by the professionals and a close below. And if you haven't got either of those, then the market is likely to move its way back. And you see there the market starting to come back. And there you see new buying to the upside because we've got this support area here. So we're going to reverse this signal. As you've gone short, you want to reverse this signal as prices come back to the new entry price there. So instead of risking 28 points, we're only going to risk 15. So we can mitigate the loss there as well. So let's see what happens. The market's undecided, and then there you see the signal being qualified as we change to green, filled, diamond and circle there for the PTP and XXX. And now we need to see the market moving higher. At this point you will have closed out the short side, the sell side, and gone to the long side there. And of course the long side has been the best side because we've got the correction in the market in the background, with the market putting in its normal sort of V-shaped correction, which we'll look at in just a moment when we look at the daily chart. So the market trading sideways. I'm going to fast forward now. The market pulling back a bit there, and then we see some more buying coming in with another buy signal, and then price is starting to move higher. There's some indecision here in what's known as a telegraph pole, and just to let you know, I am working on a set of videos that explains all of these coloured bars that you see in the price charts, what they mean and what's likely to happen when they appear on the chart, based upon the background of the market activity. So the market's it's early evening, it's sort of indecisive at the moment, and eventually you see the market going through the scalp the trade's already taken out, even though he shows a loss there. We've already mitigated the loss by reversing and going with the market. And of course, the next thing is the upside psychological level, which we have here, which is 16,750. And at that area, as we see the market driving to it, we've got 32 points on the table now. And our next upside target is the pivot point R2. This is the resistance 2 line. Bit more indecision coming into the market there. At this point, if you want to take the profits, it's not a bad idea. We're getting late into the evening, and also we've got the resistance around here. We've got the psychological level as well. We're going to see or need an increase in buying to hold the market through these levels. We're not getting the buying that we actually need. We've got up to the R1, and you can see me, I'm just adding 100% extensions here. I'm just trying to gauge how much is on the table and what to do at this point. And I can see the market's got resistance at the R2, and the decision I'm making is, do I want 40 or 50 points, 15 points to make up for the loss that I had, and to trouser the 35 points, which is likely to be on the table around the R1 level there. You can see 40, 43, 46 at this point. Again, no increase in buying coming into the market. So at this point, it's decision time. What do I do? The trailing stop I can only get below the scalp, and so if I was to hold this position, there would be 20 points coming back down towards the scalp area there, because I'm certainly not going to let it go below the 20 points there, even though I'm trailing. There's just not enough momentum to the upside in this trade. I've got some buying coming into the market now, so this is not too bad a thing, but again, it's getting late. There's 47 points available on the table. I'm now above the scalp area, but again, 43 or 20, what do I want? It's late. And here you see the market coming back down to the psychological level to find some support. I'll just fast forward this. I'm drawing in the lines again. I'm still only at the scalp, 35 points, starting to see 10 points has come back, and now we're at a really crucial point here. You can see there that the market's not holding at the psychological level, and then we see the selling coming, which is what I've said before. You need to see selling to drive through these psychological levels, and for whatever reason, whatever news item came out, it certainly wasn't a news item that was already down to come out. It was obviously something that hit the wires, and there you can see the increase in volume as the market tries to hold and then starts to move lower towards the end of the trading session there. And again, this is why it's important at these sort of psychological areas. If you've got 46 points and it's getting late in the evening, it's a no-brainer as far as collecting the profits are concerned. Right, let's have a look at the daily chart and see if there's any economic news items out for today as well. So in the daily chart, you can see this sort of V-shaped correction taking place. You've got this down followed by the up, and this pattern is every time the market's had a correction, you can see this V shape as the market goes back to the highs, because the Federal Reserve just keep printing money and funding the stock market. You can see the pattern there, it just goes on and on. So that's what we're seeing at the moment, and that's why you saw the sell yesterday finding support at the psychological levels and then turning around and moving back to the upside there. Bit of indecision in the market at the moment on the overnight market, but let's have a look at the news, see what's coming out around lunchtime to move this market. New home sales at 3 p.m. High impact news items, so there may be a bit of volatility at this time. It's forecast lower than previous as well, so this could put some downside pressure on the market should the forecasted figure come out lower than the previous one, so just keep that in mind at 3 p.m. there. And finally, in the implied volatility, you can see yesterday this actually dropping down to 13.57 and holding around the 14% area, which at the moment indicates there could be some downside pressure given a chance at the moment. It needs to go below 12.65 to confirm that the current correction that we've seen in the market is over and that the upside is the better side, and certainly is at the moment. The market's moving in that direction, and of course it will take the market moving higher for the implied to drop. So just at a crucial area at the moment for the implied volatility. Not too much of a concern, but just something to keep on the back burner there. Right, well, that's it for this morning. I will see you in Monday's edition of the Market Alert. Have a good weekend, and hopefully a good trading session today as well. As ever, thank you for your support. Thanks for watching, and I will see you in the next one.